All right, hey everyone, Julian Meyer, Managing Partner at NorthStar. Thank you so much for jumping in on today's session. If you're watching the live session, super happy to have you here. If you're watching a pre-recorded session, thank you for tuning in. For those of you that are viewing this video, you're more than likely viewing it on the investinnorthstar.com site. And we're super excited to tell you a bit more about our offering and how we're raising capital right now and how you can be a part of that. I'm going to talk briefly just on the structure of what we're offering. You can learn a lot more about our business by browsing through the rest of the materials on the site, which is the intention of the site. And directly down below this video, I believe, you should be able to find the downloads of different materials such as our pitch deck, different models and different tools that you can use to make an assessment as to whether or not you'd like to invest in our company at this point through the debt offering that we are circulating. So I'm making this video because it's COVID, and normally I'd have the pleasure of meeting with all of you one-on-one or in person or at lunches or meetings, but unfortunately in this new virtual world that is not possible, so I'll have to postpone that. But that doesn't mean that business stops. In fact, NorthStar is a business. We had our best year ever last year in 2020. And so we're really excited to go into 2021 as we start this year off with a record-breaking quarter, and also to facilitate this debt note so that we can continue to scale our business and really ramp up here as we go through 2021. So again, thank you for joining. Like I said, my name is Julian Meyer, founder and managing partner here at NorthStar. For those of you that haven't had the chance to browse through the site too much yet, or maybe don't know too much about our story, we started out as a consulting firm helping technology companies ultimately prepare to and successfully raise capital. And over the last 4 years, we've grown and scaled at an exponential rate and are now a full service investment bank that facilitates M&A transactions, both on the sell side and the buy side. We facilitate cap raises and growth equity raises for companies. We also work on a number of different strategic initiatives and projects for our clients. So as you browse through the site, you can find, I believe it's above me or above this video, you can find some recently completed transactions over the last 2 years. We've closed about 40 or so transactions comprised of everything from sell side and buy side M&A, meaning buying or selling businesses for our clients, all the way through to strategic initiatives such as valuation models and building different pitch decks and sims for clients by request. Our main focus as a firm is to really work with high growth organizations, high growth technology companies that are looking to sell either a portion of their business or that entire business, and also work with buyers to source deals for them that are off market and make those connections so that they can facilitate transactions and continue to grow their businesses. So as an intermediary, the way that our business works is that we generate revenue in 2 ways. We generate project revenues or service fees, meaning when we actually do service work for a client to prepare their deal or their business to go to market to sell it. We have a number of different things that we work on, for everything from creating pitch decks and confidential information memorandums to blind offering letters, to preparing the company's valuation models, et cetera, et cetera. We have to do all these things for these clients and then also service their deal, meaning that on a monthly basis, we're going to charge them a retainer to actually keep their deal in the marketplace and help them source either buyers or sellers. A really easy way to look at us for those of you that are tuning in that may not be as familiar with the investment banking field or the finance field in general is to think of us as real estate agents for businesses, but we are not real estate agents for small businesses. And what I mean by that is that there's business brokers, which we want to be clear, we are not business brokers. We don't just find a deal and blast out an email list and hope that somebody buys it and then charge a small commission. We're more like the realtors that actually come in and dress up your house, work on the multi-million-dollar deals, get the big office building sold. That's what's different with our practice, is that we are really hands-on with our clients and make sure that we get them the best deal that we possibly can for the marketplace and negotiate on their behalf and really work as their agent, as opposed to just being an intermediary that does an email blast or a campaign to try and find buyers for their businesses. So yeah, that's a little bit about how NorthStar works and what we do on the service fee side. And then we have success fees. So every time a transaction is closed successfully, we get a nice healthy chunk of that deal, usually anywhere in the neighborhood of 2.5% to about 5-6% on certain transactions is what we'll take down from the total value of the deal. So really easy example, if we're doing a $20 million deal and we have a 5% success fee, we're going to get $1 million on that $20 million. And so for us, what we have is we usually have about 10% of the service fees, or excuse me, 10% of the success fees are what ultimately become our service fees that are paid to us up front. So a normal client that hires us will hire us on retainer for $100,000 in that situation over the course of 6 months to a year. Payments will be spread out amongst that term. Our firm will work to bring that deal to market and to find them ultimately the buyers that are interested in their business. We'll then work with the client to close that transaction. And when that transaction closes, we're owed 5% of that transaction, as I said, in this case, which is going to be $1 million on a $20 million deal. So we have a really nice, healthy business that we've built. We collect service fees and success fees from clients, as I mentioned. One of the gaps, though, that we have is that the difference between timing kind of plays a role in our business and how we scale. So timing meaning that when we close or when we bring on a new client, we can expect our service fees really within the first week of working with that client, typically. Success fees are a different story. Success fees, we have to wait until the deal closes. So as long as the deal closes, as I mentioned, we get 5% on our example transaction, let's say 20 million. We get a nice big payday, but we have to wait usually 6 months, 9 months, whatever it is, to get that deal closed. And of course, that goes without saying that there's risk that those deals don't close, hence why we charge the service fees up front, so that we're not wasting the firm's time or money if that deal or transaction doesn't close. So for the most part, our transactions close, I believe, at an 89% success rate so far. Really, the transactions that haven't closed have been because clients at the very end have pulled out and said, you know, we want to wait, we want to grow. And it's a part of the business, it's a risk that's associated with it, but that's not really the main focus of, you know, where the, I guess, where the timeline expansion comes into play. The main focus of what happens in our business is that as you make a bigger name for yourself and as you do bigger deals, and in fact, late last year, we sold our first transaction ever to a public company, a publicly traded company out of Canada. So we took a private company, sold them to a public company. That deal really put us on the map. There was a pretty big Yahoo Finance write-up about us. And what happens is that as you make a bigger name for yourself, and NorthStar is now becoming recognized in the marketplace, views to our site are up from, I believe it was 300 a day to about 3,000 a day now. Interest levels, when we used to book maybe 2 to 3 calls a month from new potential clients, we're actually now pretty overwhelmed in booking about 5 to 10 new appointments per week in terms of clients that are interested in working with us. And we've done a really good job of scaling up our team from a small operation of 4 people to what is now 12 folks. We're ambitious and we're growing to about 16, 20 this year. And we have a number of big deals that you can see on our site that we're working currently right now that are not only extremely promising, but that are well-known, good names of clients, at least in the technology world, that are going to continue to put us on the map and that are going to make us candidates to work on bigger deals. And so with that being said, that brings us to this current virtual meeting that we're having. Unfortunately, like I said, it would be nice to have it in person. I'm happy to have one-on-one Zooms with anybody after you watch this to explain more about what we're doing here. But what we decided to do, and we actually did it in, I believe it was end 2019, early 2020, we issued our first ever debt note. So an unsecured debt note, which was tied to a payback period with a certain fixed rate percentage. And on top of that, now what we're offering is a variable rate on top of that fixed rate as a bonus for investors that is a lien against our success fees. And so to explain that a little bit more, what we're offering right now is we're offering an 8% coupon, meaning an 8% return on your investment to anybody willing to commit $25,000 or more in this round. Our payback period starts 6 months after the close on that cash. So when the capital is committed, 6 months after we start the payback period, that's to give us time to scale and to grow and to not only use this cash for what it should be used for, which is to grow, which ultimately secures the investment that much more and makes it that much safer, but also to ramp up and sign on bigger clients so that the variable rate on your note goes up as well. And let me explain that variable rate. So on top of the 8%, we're offering a bonus of a 50% of that, or 4% additional return, which is going to be paid out to investors on the day that we actually close on successful transactions and collect our success fee. What we've proposed is that the investors are going to hold a certain percentage lien, which is TBD, and will be announced in the circulars that you'll see below. And that lien will be paid out to you immediately, as I mentioned, as soon as the firm gets it. And that will ultimately affect directly the rate of return on your coupon. So the rate of return itself is going to be, like I said, that 8% fixed, which is guaranteed payback over 2 years. You're going to get monthly installments of that payment. But that lien is going to act as an accelerant to that payback period. And so whichever happens first, the end of that 2 years, post 6 months, obviously, you'll either be paid back in full at that 8%, or if prior to the 2 years, it looks like your note is going to be paid off, your total is going to be 12%. And so if you could see what we're doing, we're tying investor success, obviously, not only to the growth of the firm, but to the success of the transactions that we're closing so that you can realize additional upside on your note. And part of the reason that we're doing that is because we know that for a lot of investors, what's interesting and exciting about our business is seeing the deals that we work on and seeing the big benefit that we get when we close on these transactions. And we know that investors want to be a part of that. With that being said, this note itself is one that's designed to really get investors not only invested in the process of committing capital, but also to have investors actively participate and help the firm grow and to bring your connection to the firm so that, the deals that we're working on are larger, the deals that we're working on are closing faster, and we're having a higher volume percentage of deals that are bringing into the firm, and thus so that that variable note actually gets paid out at that 12%, not just the 8%. So that's our focus. That's the note that we're offering. We already have, I believe, about a fifth of the capital that we're raising committed. So we're working with a few other individuals right now. I can tell you at the time of this video, where we are probably going to be securing up to about 2/5 of the $500,000 that we're raising. So about 200,000 will be closed on probably by the time that you're watching this video. We're looking to fill out the rest of this round, like I said, in 25, 50, or $100,000 chunks. Unless somebody wants to come and do the whole thing, that's fine too. We're never going to say no to that. But we're really looking to fill out this round with some sophisticated investors that understand what we're doing, but that also are interested in making a good return on their money compared to other areas in the marketplace right now. And so if you have any interest whatsoever, if you have any questions for me, if you want to chit chat one-on-one on a Zoom about what this opportunity really looks like, more than happy to set that up. You can ping me. My email is all over this website that you're browsing. It's all over all the materials that you're browsing. I'll probably put it in the video for those that are watching the pre-recorded if I can, but if not, it's just my first name, Julien at NorthStar, V as in Vincent, P as in Paul.com. So that's Julien at NorthStarVP.com. And like I said, more than likely you're watching this on the investinnorthstar.com site. So feel free to browse the site, download our pitch deck, learn more about our business, get comfortable with what it is that we're doing. And then, let's have a chat. Let's see where you're at. We're more than happy to discuss what this opportunity looks like and make sure that you understand exactly what it is you're investing in. But we are really excited to have you guys on the NorthStar team and really excited to work with you all moving forward. So thanks for taking the time to watch this video. Thank you for browsing the site here, and I'm looking forward to chatting with you all. Take care. Bye-bye.